Over the past couple of weeks, we have seen some rather dramatic price swings in the stock market. On Monday alone, we saw 5% price changes both up and down at the index level. Now, since the market high set earlier this year, the US stock market is now down about 10%. So what is happening here? Well, inflation and economic growth appear to be decelerating in terms of rate of change. They're both still increasing, but at a lower rate. That's what we mean when we say a decelerating rate of change, which is what the financial markets care about. Now, at the same time, the Federal Reserve aims to tighten monetary policy here in 2022, effectively putting water on a fire while being careful not to put the fire out altogether. So how common is this type of a market decline? Well, a 10% decline occurs on average about once every 16 months. A more significant 20% decline is undoubtedly rarer at about once every 5.5 years. Now, despite intra-year declines and even full calendar year declines, the stock market produces a positive result 74% of calendar years, or about 3/4 of the time. This recent decline may seem unusual, however, given that we haven't seen this level of volatility since March of 2020. Next, let's talk about the game plan. Since we're in playoff season, we use a football analogy. When it comes to investing, we believe we need to have players on both offense and defensive positions. Defense is preparing for volatility before it occurs. Now, one example from our approach at Vector is that we set aside dollars you need in the short term, the next 2 or 3 years, in lower risk, more stable investments. Now, we call this segment of the portfolio assured income. This is the segment that buys time during periods of market volatility, allowing other parts of the portfolio to recover. It's sort of like calling a timeout in the middle of the game. We do this because the last thing we want to do is be forced to sell stocks that are down 15 to 20% to cover your short-term needs. Let's talk more about offense. As I mentioned, the US stock market is down about 10% from the highs set earlier this year. And certainly quite possible that volatility continues and we see more intra-quarter price swings. Now, when on offense, our focus is looking for opportunities to add to stock investments that are down in price. This is done with the longer term segment of the portfolio, typically beyond 10 years out. This, in our view, is the most appropriate place to go on offense, given that time is on our side with these longer term dollars. We continue to evaluate markets daily, and should we see more volatility and perhaps a larger pullback, we will look for opportunities to rebalance and add to stock investments for the long term. Historically, during periods of market declines when uncertainty is high, investors that remain patient and rebalanced or added to stock investments have been rewarded. As you can see here, results after market declines have historically been quite strong. I'm going to leave you with this image that we referenced in our recent quarterly market update call. This is a good reminder of expectations versus reality when it comes to investing. Now, we don't know when the next surprise will come at us. However, we do know that surprises will occur. Creating a plan together and having a playbook in place is what can help effectively position for uncertainty.